Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Cryptocurrency investors are bracing for a major event in coming days, the Bitcoin Halving. This is when the amount of Bitcoin that can be mined is limited further and the rewards reduced. It's likely to happen sometime this week, though it's hard to pinpoint exactly when it occurs. Now, I've got to say I'm a little confused by this, and I don't really think I'm alone. Today, I wanted to find out exactly what the Bitcoin halving involves and what the impact is on crypto investors, especially considering the recent boom in Bitcoin ETFs. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Jonathon Miller is the Managing Director of Kraken Australia. Kraken is one of the world's largest cryptocurrency exchanges. Jonathon, welcome to Fear and Greed.
Thanks for having me. Great to be here.
Jonathon, I don't know how we're going to go here. It's quite the task explaining this to me. So let's start with the absolute basics. In a nutshell, can you define what the blockchain is and what mining is?
Yes, sure thing. Bitcoin is one of the first blockchains, if not the first. Remembering this is an open source technology that developers have created and can change over time. But the Bitcoin blockchain is a decentralized network for peer-to-peer money. Now, that allows people to send value over the internet like they would an email, one person to the other, without any intermediary. That's a revolutionary concept, and it's made possible by a large network of computers all crunching the numbers on Bitcoin. These computers aren't in any one place. In fact, you and I could buy some hardware and mine Bitcoin ourselves. The process of crunching the numbers is known as mining. And the reason they call it mining is because when you contribute to this network by crunching the numbers on people sending Bitcoin from one person to the next, you get rewarded. And the reward is Bitcoin itself. So there's a limited total number of rewards over time. And that's what we talk about when it comes to halving, is how much of the reward will you get, from now on. And that reward gets less and less as time goes on, which is a very interesting dynamic.
Okay, so thus far I'm with you. So this is good. So essentially, I should think of it like a blockchain technology, kind of like a ledger, a record, which is extremely secure, allowing me to transfer to you, for example, Jonathon. And the mining aspect of it, the part that you said there, so people mine, as in provide their kind of intellect and their firepower to the blockchain technology, and they get rewarded via Bitcoin. So there are professional people out there who literally make a living out of doing this, out of mining. Is that right?
That's pretty close. The thing is, though, the power that's being provided to this securing this ledger is all CPU. So this is all computer power that's being deployed. You might have seen pictures of big warehouses of computers spinning fans.
Yep.
That's part of this story. The industrialization of the process has meant that there's some interesting conflicts potentially with the respect to the amount of centralized mining power that might be deployed by people with deep pockets. However, it remains true that there's no one group of people that can control the ledger. It is distributed, it is decentralized, and the act of validating the transactions gives you a reward. That reward is part of the process. It is a transaction fee. There's two components to the reward. There's a transaction fee for people wanting to send Bitcoin. If I was to send you one Bitcoin, lucky boy, I would pay a fee. That fee is not very large. It's flat. It is in Bitcoin. And the system, the network, will release those transaction fees to the miners, along with new Bitcoin. The newly minted Bitcoin is the mining reward, and that's what we're talking about when it comes to the halving, is the reduction in the mining reward. So the transaction fees will always be there, but the new Bitcoin created will be lowered over time, will be less over time. And this is a key feature that's built into the code. It underpins the value, in our view, of the proposition for an asset that has a fixed maximum supply. So it's a deflationary asset.
Yeah, so it's a scarce resource and becoming scarcer because it will expand in as much as the amount of Bitcoin will expand. But over time, the rate of expansion drops, which means it becomes a more scarce value the more people use it. Am I right in that?
Yeah, I think scarcity is an important consideration here. There is a maximum total number of Bitcoin that will be available to everyone. And that maximum we are approaching. We're not quite there yet. So there's still new Bitcoin being minted and it's being claimed by those miners. We believe that we're close to 94% of all Bitcoins that have been created, so to speak, by the process of mining. However, transaction volumes and the movement of the Bitcoin from one person to the other incurs fees. So there will always be transaction fees, but the total number of Bitcoin available in the system will be limited. Important to note that you can send fractions of Bitcoin to one another,
Yeah.
the smallest fraction being known as a Satoshi. So you don't need to send one Bitcoin. That'd be a large transfer, a large transaction today. I could send part thereof. But the critical point here is that this is an asset that is limited in supply, and so absolutely is scarce. In fact, we think it's the soundest money. It's the soundest money that exists today, and that's why people get really interested in it as far as the kind of macroeconomic story goes, but also just a pure fascination with a technology that can be operated this way and can create this kind of value.
Stay with me, Jonathan, and we'll be back in a minute. I'm speaking to Jonathon Miller, Managing Director of Kraken Australia. The fact that it's actually, in our example, a transaction between you and I, Jonathan, without an intermediary, then that sits at the heart of that's kind of the allure or the part of the value proposition in Bitcoin is that one-on-one transaction. And with 94% of Bitcoin in its entirety have already been produced. Kind of you put those together, suddenly it does become a more investable asset, I think.
I think people look at the blockchain network that is Bitcoin and they get inspired by that in different ways. And one of those is that they realize that this is an alternative network for sending value over the internet P2P. Now, that is revolutionary. That is very novel. We believe that has inherent value. There's also another thing that people get excited by, which is the prospect of using that technology, blockchain technology, for other things. And so that's where we see a whole long tail of additional other cryptocurrency networks spring up because, and I think this is testament to the qualities of the Bitcoin network and what it has proved, which is that alternative networks for the movement of value and more, the movement of information or the securing of information globally using decentralized distributed networks is of significant value. And so people look to Bitcoin as the leading light, as an investable asset perhaps, but also as a proof point in what is a new technology.
Yeah, okay. I can say this in all honesty, kind of the light is slowly turning on here in terms of the inherent value of Bitcoin, which is what I've always struggled with. But there is if there's a demand for Bitcoin, there's a scarcity of it because of the halving over time, and there's a use case for it, then it has an inherent value, which is what you just said. With the halving, is this kind of the genius of when Bitcoin was set up to actually have it, the pace of growth reducing over time? That seems to be quite a genius idea of 20 years ago or whenever it was released.
Feels like 20 years ago. It was 2009 or 2008.
Wow.
And so we're kind of approaching that mark, which will be a milestone. I fully agree with that sentiment, which is that the pre-design here, the thinking that went into the design of this algorithm, which is what it is, it's a code base that's maintained open source, which is also another really important point, was very thoughtful. And it was also in response to, a very inflationary period of time in 2008. And so I think, Bitcoin as sound money, as digital scarcity, which is something that isn't synonymous necessarily with computer technology. I think the computer invented the copy and paste, so to speak, or at least an efficient copy and paste. We could cut up with scissors with typewriters, but the replicability of data in computers, that's inherent to the nature of a computer system. Bitcoin and a blockchain essentially turns that on its head and creates digital scarcity. And that's a revolution. that's what got people very excited in the beginning, because people had tried digital money before, and digital money never worked because it relied on a central clearinghouse. Otherwise, you could copy and paste it. You could forge it. So Bitcoin solves that problem. It solves what's known as the double spend problem, where you would spend your money twice. Not ideal for money, and it certainly does embody what we would like to call deflationary asset.
Okay, so the halving occurs in the next couple of days. Why is it in the next couple of days, and what's likely to happen based on previous halving events, what happens to the value of Bitcoin?
Yeah, these things are quite often linked, because the halving event is newsworthy because it's so interesting, it's so novel, that this is planned in algorithmically. The reason it happens, to your question, on a certain date is because the time elapsed between the last halving and now is a function of the code itself. So the word blockchain speaks to the way that the information is grouped. The ledger, as we discussed earlier, of transactions is grouped into blocks and then chained together using cryptography. So the ledger today is linked to the ledger yesterday. And this happens on a shorter time scale. Every 9 or 10 minutes or so, the ledger is updated. There's a number of blocks that we have to wait until the next reduction in reward occurs. We're almost at that point. We estimate that to be in the next couple of days or in the next week, but really it depends how quickly or slowly those transactions are confirmed and the blocks are created and linked together. So it's algorithmic, and we watch and wait.
Can I just ask, is there a disincentive though for a miner out there who's been pushing to earn X Bitcoin? That miner is now going to earn X on 2, as in half a Bitcoin. So is there a disincentive for people to be doing it?
There's all sorts of incentives at play in the mining game for crypto. That includes the mining reward, but also the transaction rewards.
Yeah.
So the reward that a miner gets for staying in the game is a function of multiple inputs. Yes, it changes the incentive dynamics, but it doesn't remove the incentive altogether.
Okay. So what happens to the value of Bitcoin when this does happen based on previous examples? The fact that the reward for mining, is that necessarily going to actually change the value of Bitcoin or not?
I think historically, the conversation around halving translates somehow into, price movement, volatility, generally speaking. This is a volatile asset because it's so new. It's still new despite being, 2008 conceived. However, I think that the progress being made towards adoption is probably the more important thing to look at. Because everyone who already understands Bitcoin knows that the reward is reducing. But what we note is that there's currently probably only 10% of the population globally that has adopted Bitcoin. So what we see is when Bitcoin and people learn about it through conversations like this, they realize the potential inherent value of it, or they see value in the technology and the asset itself. And so price does sometimes follow, and we see kicks around this time of the halving. However, I think that the adoption metric is the one that we really should be looking at. And that really is the true driver, given that scarcity is the kind of underlying feature of Bitcoin.
Jonathon, you have done the impossible. You've actually helped me understand Bitcoin, and I have been a skeptic for a long time, a former central banker myself. I've never really believed it, and I'm going to have to totally rethink my view on Bitcoin. Well done.
You're most welcome. I'm pleased to hear it.
Thank you very much for talking to Fear and Greed, Jonathon.
Thanks for having me on the show. It's been great.
That was Jonathon Miller, Managing Director of Kraken Australia. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.